Hi guys, welcome back to my channel. In today's video, we are talking about key levels. So first of all, I'm going to run through this little intro that I have here and kind of what we're going to talk about. I'm going to keep it short and sweet like I normally do. And then I'll go over a chart. I'll use a chart and I'll show you what I'm talking about. So there are 5 main areas that I want to focus on today when we're looking at key levels. So one is like differentiating between key levels and support and resistance. Number 2 is looking at round number levels because they're pretty much the same thing and it's going to help you with the direction when plotting key levels. We're going to look at multi-wick touches and specifically on higher time frames because that's where you want to look for those things. And then we're also going to look at multiple confluences, specifically fib levels. Because that is how I draw my key levels. And obviously, this is all based on my experience. You can feel free to share your opinions and things you've learned down below. That's totally cool. And yeah, let's get right into it. All right, guys, so getting right into it, let's talk about the difference between support and resistance and key levels, because I think that's really important. So first of all, the biggest difference is that support and resistance, it's like it happens everywhere. And a really good example for you is like if I just like randomly click, okay, I just randomly click this line. I'm going to make it black. I don't know why it's white. Okay, I just randomly plotted this, right? I saw this on another video actually. Who was it? It might have been, I don't know. It was some other YouTuber. I can't remember now. This is a while ago. And I just randomly plotted this, right? If I go back in time, we're going to see eventually that this acts as some sort of support and resistance. Here it's acting as resistance, right? Here it's acting as resistance. And if we scroll back long enough, you're going to find more areas. So, and the reason that happens, it's just there's so much price action that inevitably every area is eventually going to act as some type of support and resistance at some point in time. And that's not to say support and resistance is completely useless. It just means that it occurs all the time. So think of support and resistance as being the pivot points, so the potential reversal areas that happen between key levels. And key levels are areas that, or zones that are more likely to show reversal or to have some type of reaction, right? So that's the easiest way to plot it. So to explain it, So if we were to plot, a daily zone here. I don't know if there's a daily zone here, to be honest with you. We're going to zoom out and look at all that. But if there was a daily zone here, then obviously, so if this was our key level, right? And then we'll plot another one down here, right? Where we have multiple wick touches. These would be our key levels. And then all of these little lines that you're seeing in between, right? Here's a resistance. Let's go again. We even have like another little resistance here, but here's a support here, right? And you can see, sorry, I meant to use the same tool, but you can see that there are multiple in between. So that's the biggest difference. And also just keep in mind that key levels are often, not always, because they're not always going to be respected, but often respected a lot more than basic support and resistance. The next thing I want to talk about are round number levels. So this is a theory that is somewhat debated. Like obviously we all have different experiences with different price points, different price levels, and all that stuff. It's something I use and I have back tested and used, but you don't need to take it as, something that's black and white. You can definitely look into it yourself, which I always advise doing anyway. If you're learning anything from anyone, you really should be back testing it yourself. That's just the smart way to do things. But when we're looking at round number levels, essentially, guys, it's just a round number price. So that's really what it is. So let's say like 2020, right? So what you would do is plot your line at 2020 and you can double click and actually make it right on the dot, right? I think I actually spoke about this in another video, but then you can create a zone around that area. And it doesn't need to be absolutely perfect or anything like that, but we can extend to left and right. And then what you would do is go to the daily chart. We can see that there has been, some reaction to this price point a few times, but ideally a key level, guys, it's going to be very clear. Like we can see this level here, how it's highly respected, right? And it's very clear that this is some form of support. And ideally, that's what you want to see with the key level as well. Not necessarily every time because these levels change, but if we were to go, let's just go to the daily chart so we can see this a little bit more clearly. And if we go back, okay, I'm not going back too far. Oh, I'm already back I went back really far actually. But that's what you're looking for, okay? So you're looking at essentially round number price points, and it would be any round number level. They're not all going to work out, like I just said. Now, actually looking here, we can see that there was very clear rejection here, right? Assuming this goes on down, this definitely could be a good key level to be looking out for. But again, it's any round number level. So we can use 2020, 2030, 2040. And then on the lower time frames, you can even start breaking that down. So you could do like 2021, 2022, right? And looking at everything that's round in between. Obviously, you just need to consider what time frame you're using. But yeah, if you go down to the lower time frames, you'll see you can obviously use lower price points, right? Like if you were to go to the 5-minute, I'll give you an example. Instead of using 2020 and then waiting for, 2024 or 2026, going by increments of 2, you could look at 2013. You could look at even 2013.5, right? As long as the end is round. So that is totally up to you. And obviously you should look at these levels and backtest them with your strategy. But that is one method of using round number levels. So they do often occur at specific price levels. The next thing we're going to talk about are, actually, I'm going to switch to the higher time frames, and then we'll talk about the importance of doing that. So higher time frame structure, you've probably heard this a million times, is often, not always, but very often more highly respected than lower time frame structure. And in addition to that, it's a lot easier to spot higher time frame structure. So you can see that moving out to the daily time frame, it just cleans up our chart a whole lot. And if we are to kind of move over and look at just a few different levels, we can see that. So essentially when you're drawing a key level, and this is again how I do it, and I just think it's the easiest way to do this, you're just looking for areas where you're getting either strong rejection or a lot of rejection. That's the easiest way to put that. And what I will normally do is use the engulfing method to plot them in. So the engulfing method, remember, is just when you have it's not what I was trying to do there. It's just when you have, where's my little drawing tool? Okay, I'm going to try using this and see what we get here. So it's just when we have a long bodied candle. This is really bad because I'm not using my pen, guys. And it completely engulfs the previous candle. Okay, that is what we're looking for. It doesn't need to be a perfect engulfing, meaning maybe your wick comes outside of it, right? But as long as the body is engulfed, then I will use it. So that is that. So that's what I'm doing over here is I'm boxing in with this rectangle tool. I've boxed in the smaller candle here. Okay. This would be the engulfing. I'm going to zoom in so you guys can see what I'm doing. Oops, I'm still on that, am I? And I have a bunch of those. Let me remove drawings. Okay. And I'll just draw it in again. So this would be our engulfing candle right here. And I'm going to box in the previous candle body. And that's going to give us, and because there's a little bit of price action outside of it, I will move it down. And that's how you do it. Very easy, right? And the reason I used this level is because it's a very obvious level. Price came down 3 times and showed a really strong reaction here. So that's a very obvious key level to me. Again, looking at, let's just do the same thing again. We're looking at very, very obvious levels. This is the one that's, kind of speaking to me. So if I were to box this in using the same method, right? Just looking for an engulfing candle, and I box in the smaller one, we can see that there was very clear reaction here, right? Very clear reaction here, and that's enough for me. That's a good key level. And you can kind of do the same thing where it's very obvious. The next obvious point is going to be likely this area here, because there's a very clear reaction right here, right? So if I go back and I see that this, let me just box it in quickly. And we can see it's respected here. Respected meaning we get a wick touch, right? Some sort of reaction to it. But yeah, that would be another key level I would look at, assuming, you validate it and it's all good. And when we talk about validating zones, it's when you go back. So I will do it again here now. And then I'm going to show you guys a cool indicator that I found. Okay, no, the weekly is not working. Sorry. We'll go to the daily again and see. Yeah. So when you zoom out and you go back, we can see that in the past, this level was respected. That's what I was looking for, that higher level there. The next thing I want to look at, I'm going to clear all of this. There's an indicator called Jorgum. I'm assuming that's how you pronounce it. I think the B is silent. Key levels. This is a very good indicator for drawing zones. It's the best one that I have seen so far. It does draw a lot of zones, but you can go in and tweak it. I don't tweak it at all. I actually just leave it. And then what I'll do is the zones that I validate myself to be good, I draw in. Like I can tell you right away, this one here, right? I believe we actually had that drawn in. I should have kept it there, but this is going to be a very obvious key level, right? Same thing, like, and there are a bunch here that I wouldn't use either. Like you can't use every single zone that you see, right? Like I probably wouldn't use this one here, but that's up to you. But it does draw in, it captures for the most part, the most obvious levels. So what you can do is kind of use it as an outline and then go in, validate for yourself and draw them in. I find this really helpful for me personally. So yeah, you can try using that one. And I'm just trying to see if you can, I don't think for some reason you can, yeah, no. So you can't change the colors. Oh yes, okay, you can. You can change the colors. Okay, good. So yeah, that's a nice little indicator if you want to check that out. If you don't like indicators, that's fine. You can just draw them in with the rectangle tool. And the last thing I want to talk about, and this kind of goes hand in hand with validating zones or how I do it. And remember, again, guys, this is just how I do things. I'm just sharing kind of things that I've learned and tips that I've picked up along the way, but it's definitely up to you to back test all of these things for yourself. Again, you should be doing that anyway. I just like sharing what I know and what I've learned and that sort of thing. So if we go to, no, we're not going to go to indicators. We're going to look at fib levels. So one thing you can do to kind of confirm, and this is just going to be an added confluence for you if you're looking at a level. So if you draw in, a key level that looks very obvious to you, but you want some form of confluence to know that that level is valid, you can also use fib retracements to confirm that level, because fib retracements do tend to be highly respected levels on their own. So again, drawing your Fibonacci retracement is just going to be, so you're going to take it from the swing low to the swing high in an uptrend, and then in a downtrend, it's going to go from your swing high to your swing low, right? And then what you would do is, all right, and I just went back from this area over here to this area here really quickly, because this is just not a great trend and not somewhere I would be wanting to draw a fib. You want to have like nice deep pullbacks, right? When you're drawing your Fibonacci retracement. And I have other videos on fibs, guys, if you need more information about that. I just try not to go on too long about one topic in particular. But if you want more information on anything, please let me know below. And I'll definitely try to help you out, okay? But what we're doing is, again, so drawing from your swing low points. This will be, right, this is our swing low, our swing high, our swing low, our swing high. And then you're going to box in. When I say box in, all I mean is taking your rectangle tool and putting it between the 50 and 61.8. I'm also going to let you guys screenshot my fib settings if you want. I keep my Fibonacci retracement really clean. I don't put any levels that I don't use or don't need. So if you do want this, you can take a screenshot there. And then this is going to be our potentially another key level, right? So this is our 50 to 61.8 fib retracement. And now you can kind of go back and remember we're on the daily chart and look to see if this has been respected, this area as support and resistance in the past, which we can see it has, right? It's got multiple wick touches. So now when you go down to the lower time frames, this can act as a nice key level for you. And I think that is it, you guys. We've talked about higher time frames. We've talked about round number levels. There are a few indicators also, I should show you that, when looking at round number levels, but they're usually specific to the pair. So like I'm trading gold. I don't think there's a gold one, not that I know of. Yeah, no. Could also be called psychological levels. You will hear them called that a lot of the time. Let's see what this does. I'm just looking, guys. I'm not. Yeah. So this is plotting it at round number level. So you can look at this one if you want to. It's called Psychological Levels, and it's by. Got that fast. Okay, we might have to rewind because you might have to rewind the video. I'll put it down below because I don't even remember. I think it was this one actually. I think it was one with 89 is what I remember. So here, I'll favorite it. Barnaby Graham. You can go through these two guys if you want, right? And look at and see which one is better. But now you can see, so you can see how, look at 700, how well that was respected. Do you see how this kind of plots in some really great levels? Oh, I don't know what's going on there, guys. I think it's just not doing it over here for some reason. Because it only goes up to a certain price. That's why that's happening. So you can play around with it, but you can see, I mean, this is a good kind of visual example of how these round numbers can act as really strong levels, but this is hideous. So we're taking that off. But you get the gist of it. And yeah, so we talked about fib, we talked about higher time frame levels, we talked about the difference between key levels and support and resistance. I might have talked a little bit quickly during this. If there's any questions that you have, please let me know below. And yeah, I'll see you guys in the next video. Thanks for watching.